EPFO is investing. Insurance companies are getting money. FPIs have been 1 month seller, 2 month buyer, 2 month seller, 1 month buyer. Net flow wise, our worry is where will we get the supply?
We have a special guest coming from Kotak Mutual Fund, Mr. Nilesh Shah. He is the CEO at Kotak Mutual Fund, and we want to have a very detailed discussion about what are his views on the market. So, Manvi, are you there? Can you? Okay, so he is just joining in. Just bear with us for a minute or two. So, what we want to deep dive is the thought process of the Kotak Mutual Fund, what are their views on the markets, and also try and understand more about where are we headed as an economy.
Hi,
Yeah,
Vikas.
yeah. Hello, Nilesh bhai. Thank you so much for taking the time out from your busy schedule and joining in. There are a lot of investors who demanded that you should be here and talking to them.
No, it's my pleasure, and I'm at the Flame University, Pune, so very good place to be giving interview.
Yeah, absolutely. So the founders themselves of Flame have really given a lot of interviews like you. So it's a great.
Absolutely.
Thank you, sir. So thank you for joining in. So Nilesh, there is no presentation as such. We're going to have 30 minutes of yours valuable time. Idea is to read your mind and understand one, the outlook of the markets. What are your views? A, and B, I have specific few questions for you post that with your opening remarks. So there are about more than 7,500 investors who are there and listening to you with help of Economic Times, and an idea is to first understand your views, and then I'll ask questions. Over to you, sir.
Sure, Vikas bhai. Very good afternoon to everyone. Today, when we look at market, we see market at all-time high. If we apply Warren Buffett's market cap to GDP ratio, we are trading at 132%, well above our historical average of 80%. So clearly, one can see that our markets are at all-time high. What is known to the market and maybe unconscious to the investors is that our profit to GDP ratio is also near all-time high. In 2007-8 bubble time, profit to GDP ratio had gone to as high as 7%. Bearing that exception, current numbers of about 5% of GDP is one of the highest. If your profit to GDP ratio is high, undoubtedly, despite market cap to GDP ratio at all-time high level, valuations are not all-time high. They are still reasonably valued, or one can say they are little expensively valued. But critics will agree that it's not very expensive. An optimist will agree that it is not very cheap. We are in the middle. Now, what is sustaining this valuation and where does market go from here? Any market to run, you require three things. First, fundamentals, then investor sentiments, and third, money. Let's look at fundamentals. As I mentioned, profit to GDP ratio for listed companies about 5%, and it is expected to remain at this elevated level for some time to come. Next year, street estimate is about 15% earnings growth. And in the past, we always started with 15% earnings growth and came down to actual number at 10, 11, 12. But FY24 was different. The actual earnings growth came 3% higher than what was at the beginning of the year. So should we be touching Nifty 50 earning per share of about 1300 to 1325 for FY25? Looks possible. That does provide some sort of valuation support to the market. Let's look at sentiment. We have seen how retail investors have navigated volatility during election time. April, May FPIs were seller, retail investors kept on buying. June FPIs were seller, retail investors kept on buying. Exit poll announcements, market went berserk. FPIs bought, retail investors sold. On election result day, FPIs sold aggressively, retail investors bought more aggressively. Next day, FPIs tried to tease retail investors by selling more, and that were leapt up. By next Friday, market was where it was last Friday. If you had left office on Friday evening and resumed on Friday morning, you wouldn't know what happened on Monday and Tuesday. This is all possible because of the positive sentiments of retail investors. And the best part is that we are only talking about 4.5 crore investors in mutual fund and 7 to 8 crore investors in stock market. There are 32 crore people in India who has more than a two-wheeler. They are all potentially stock market investors. You can very well imagine what will happen to the market with this kind of sentiment. Finally comes flow. Money is equally important. People can be positive, but if you have no money in pocket, market does not move. Today, domestic mutual funds are getting flows. EPFO is investing. Insurance companies are getting money. FPIs have been 1 month seller, 2 month buyer, 2 month seller, 1 month buyer. Net flow wise, our worry is where will we get the supply? Now look at the Triveni Sangam of fundamentals, flows, and sentiments. Put together, it will be fair to say the downside of the market is limited unless until something fundamentally goes wrong in this story. What are the events which market is not discounted? A fall of government, certainly market is not discounting. A geopolitical risk flaring up, certainly market is not discounting. Fed raising rates, certainly market is not discounting. Bearing those kind of unforeseen, unexpected events, we believe downside of the market is limited. Now, are there certain pockets of exuberance in the market? Undoubtedly, yes. SME exchange is one where now the SME index IPO is above Sensex in less than 5 or 6 years. That kind of stratospheric heights is generally not good for investors. There are questions around the accounting policy in SME exchange companies. There are questions about limited floating stock in the same counters. I think that's one area where people will have to be cautious. Same thing in markets. There are some low floating stock counters where public holding is less than 15%. It is concentrated in few hands, and which is where a PSU bank starts trading at FMCG company valuation. A defense company starts trading irrespective of whether it's making profit or loss. I think those are the pockets where one will have to be cautious. By no means I mean that they will correct tomorrow. I have been making these statements for last 6-8 months, and prices have gone almost every day. So you never know when the bubble will bust, but you know that at this valuations to invest, you really, really have to be very lucky to make money. Overall, I think we are in a reasonably good shape as an economy. It's not that we don't have our challenges. We have certainly many, many challenges which we need to solve. But courtesy the Triveni Sangam of fundamentals, flows, and sentiments, we are in a reasonably good shape. Now, let me paint because by bearish scenario as well as super bullish scenario. And by no means I'm saying that this will happen, but these are just examples to create extreme. Now, for example, let's look at from a global point of view. Today, India trades at 8 times higher valuation than Russia, 3 times higher valuation than China, twice valuation of South Africa and Brazil. We are getting this valuation because our earnings growth are superior to them, our governance standards are superior to them, and investors haven't seen us scoring self goals like those countries. For example, people avoid Russia because of Ukraine. Now, what if there is a pro Western Russian president? Will people dump India at 20 times forward to get into Russia 3 times forward? Answer is yes. That kind of event can create bearishness for our market. On the other hand, we know China has design on Taiwan. Today, many people are leaving India to go to China, even though for last 20, 30 years, stock investors haven't made enough money in China. Now, what if China actually does something in Taiwan? That again puts investors at odd to China, just like Russia. Then in emerging market, they'll have to look at other alternatives. Brazil with their communist government has a challenge. South Africa with their social strife has a challenge. Turkey with depreciating currency has a challenge. Korean market has issues related to valuation, partly driven by governance related issues on intergroup transactions. Effectively, India will be choice number one, and money will flow to us that will create the bull market. So while we are internally fairly secured and stable, keep an eye on global event. One of that event will be very positive for us, or it could be negative for us depending upon how it happens. But subject to that, we are in our Amrit Kal. Invest for the journey of India to become a Viksit Bharat. There will be ups and downs in the markets. But like in the past, if you pick up good management and good stock, you will come winners over a period of time.
Thank you so much, Nilesh, for sharing your valuable wisdom with us. My first question is, if you allow me, so we saw that in the MSCI index, we talked about Russia and China, so the weightage of India has moved up from 8.5% to 16.5%, whereas the China is moving down. Do you see further more scope for India to have more exposure if FIIs resume back to India and start deploying?
Undoubtedly, yes, because by unlike in the past, our regulators are very, very actively liaising with index agencies. When they come to India, there is meeting at the highest level. And two events can increase India's weightages even further. One, in probably third quarter review this year, HDFC Bank, which is into MSCI Emerging Market Index at 50% weight, could go at 100% weight. Uh, MSCI rules were modified to include HDFC at 50% weight. It could come at 100% weight, and that will increase India's weightages by about a percentage point. The second is Korea. Because of the estate duty and wealth tax, Korean stock markets, Korean chaebols prefer lower valuation, and they achieve that through intercompany transactions. This is very simple summary of a very complex problem, but that partly explains why Korea's valuations are poorer compared to other emerging markets. Now, they, when they compare themselves with emerging market at $35,000 per capita GDP, it's like slightly odd comparison. They believe if they go into developed market, their performance will be looked better and they could get higher valuation. Now, my feeling is that at some point of time, MSCI will recognize that Korea is no longer emerging market. It is a developed market with $35,000 per capita GDP. And if that moves out, their part of weight will be distributed to India. That may happen in 2025. So you have roadmap to get one percentage point increase each in MSCI Emerging Market Index for India with HDFC Bank and Korea event.
My next question to you, thank you so much, Nilesh bhai. My next question to you, as Nilesh bhai, who is the CEO of Kotak Mutual Fund, then someone who works closely with Ministry of Finance. Now, this time we did not expect BJP to get to a situation where they are now. Now, I want to read your mind is what are the major economic reforms what they were planning within the 100 days, which you think can go on board, or which you think they are still there on the card.
So, because by I don't have any privileged information, but I'm just making a guess as a mutual fund industry person. Uh, because it's a NDA government and not BJP government, contentious issue will go behind. For example, Uniform Civil Code looks like history. One nation, one election is unlikely to be at the fast pace. A population control bill again could be at the back burner. Now, these are unlikely to impact growth in a meaningful manner in the medium term. There are few things which will continue as before. Digital India, Bheem, Aadhaar, UPI, Cowin, Digi Yatra, Digi Locker. Well, that's likely to continue. Infrastructure investment for roads, power plants, water, that's going to continue. A boost to the rural economy and consumption at the bottom end of the pyramid, either through Pradhan Mantri Awas Yojana or through Manrega allocation, well, that's likely to continue. A renewable energy focus, that's likely to continue. So there are many good things which will continue. And most importantly, I believe fiscal prudence will continue because of 1,23,000 crore additional dividend from the RBI. Now, there are few things which will go down or which will go on to the back burner or which will go into the slow process. For example, farm laws. Even a majority BJP government could not pass farm laws. So a coalition government getting entangled into farm laws looks difficult. Land reforms and labor reforms. Well, you don't want to open new fronts, and hence both this issue will remain buried. GST rationalization. Now you have to get together many states. Unlikely that you will attempt it without wider consultation. Uh, these are the kind of things which will go on to the back burner. Few things will continue. My feeling is that execution focus will be same as there is continuity of ministry, but certain contentious issue which are necessary for our long-term growth may have to be widely discussed and may have to be widely calibrated before implementation.
Thank you. Understood. My last question, Nilesh bhai, what are your views on Rupee? We continue to depreciate vis-a-vis other currencies or maybe dollar in particular. So you think that some kind of changes are expected in next year or so?
So because by on rupee we are completely at the mercy of RBI. The RBI probably is PhD in managing currency. Officially, they intervene to contain volatility, not to influence direction. Market decides the direction, but volatility is contained by the RBI's intervention. They have $640 billion of reserves behind them, and we have seen them using that all the way down to $520 billion to defend rupee, and also accumulating all the way up to $640 billion to support rupee. With this kind of massive reserves and the kind of current account balance we have, and the stated objective of RBI to let market determine direction, but their objective is to contain volatility, it's very, very difficult for our rupee to move against the wishes of RBI. And RBI does not defend a level, they are flexible. They allow long rope to the market on both sides, rupee appreciation as well as rupee depreciation. And at the right minute, like an expert kite flyer, pulls the string. They pull the string and make the market move as per their wishes. To cut long story short, in the near to medium term, please watch RBI's hand. It's they who are dealing the cards, and game will follow their hand. Over medium to long term, contrary to some opinions, I do believe rupee will depreciate. Our productivity level and our inflation level is still higher compared to our trade partners, and hence there will be marginal depreciation of rupee despite flows engineered by RBI to maintain our competitiveness. So I will say build 2 to 3% depreciation of rupee every year till such time you see India's productivity and inflation narrowing the gap vis-a-vis trade partners.
Great. So one more question, if you allow me. I won't take more than five
Sure.
minutes. I know you are at Flame University. So Kotak Mutual Fund is, I would say, stalwart in mutual fund industry. One of the largest players. You manage a sizable amount of equities and debt portion. This is the platform for alternative investments, and Kotak Mutual Fund has presence on both the sides. Now, with the new innovative products entering in, like private credit funds, private equity funds, do you have any plan as a CEO of the mutual fund company, Kotak Mutual Fund, to also emphasize and focus more on this side of the table?
So undoubtedly, Vikas bhai, uh, we focused on mutual fund as that was a low-hanging fruit, and our skills, our platform was ready-made for mutual fund. 10 years back, when I joined Kotak Mutual Fund, we already had Harsha Upadhyay and Lakshmi Iyer delivering fantastic performance on the equity and debt side. So we went ahead into mutual fund. Of course, we also had a PMS business run by Anshul Sehgal, and it had its ups and downs, but overall it did deliver fantastic return. As we were focused on mutual fund, we also launched NDPMS for our customers. And I think last week only it crossed 2000 crore. We are in the process of recruiting a private credit, performing credit fund manager coming again from Kotak alternate side with a impressive track record. So over next 3 6 months, you will see us launching performing credit fund. We are also in the process of developing our quant ability so that we can either launch a leverage fund or a long short fund. Uh, Both these are specialized subject, and we want to run the models in laboratory for a period before we bring it out for the customers. But over next year or so, you will see performing credit fund from Kotak Mutual Fund on alternate platform. You will see a leverage or a long short fund from Kotak alternate on an from Kotak Mutual Fund on alternate platform, and hopefully we will be able to launch a quant fund where we will combine multiple factors to create winning combination for our investors. What we did on mutual fund side in terms of growth and meeting our customers needs, we would love to replicate on alternate side. It's a crowded market, the customers are discerning, but we hope with our investment expertise we will be able to meet their needs.
Great. Thank you so much for sharing your plans, and it was pleasure talking to you, Nilesh bhai. As always,
Thank you.
reading your mind is like I can't express, the kind of insight that every time when I speak to you, I get about the economy. So thank you so much once again.
Thank you so much, Vikas bhai. It was my pleasure and wish you all the very best.